Hello guys, and welcome to today's live stream. Which is happening ahead of the CPI data, which has the forecast was 0.3%, and the actual data came out as 0.3%. That is month over month. Then we have the CPI yearly, where the forecast was 2.7%, and the actual data came out being 2.7%, which is the same as what was being forecasted. So I want us to take a look at the Vechain chart, which is giving us a bit of a sell-off at the time of this stream. I want to use the 4-hour chart to give you my analysis. So Vechain has been obeying the additive structures from the lows that we made on the 4th of November, where you can see that we first peaked to the upside in an additive count 1, so a pullback in a wave 2, a bounce in the formation of this wave 3, a wave 4, and then finally peaked to the upside in the formation of this wave 5, in a move that gave us a high above the $0.08. And that 5-wave structure to the upside completed an even larger additive count 1. Then we started a bit of a sell-off in the formation of this wave 2, which is what we should expect after seeing an impulsive additive count 1. And the minimum pullback target areas for that wave 2 were given by connecting the Fibonacci's from the lows that we made on the 4th of November to the highs we made above the $0.08, in a move that gave me a minimum pullback target area between the fib level 0.382 and the fib level 0.618, and that was between the 0.05675 and the 0.04232, an area that we saw a pullback into, though we didn't quite fully maximize the target area. And you can see that earlier today we started a bit of a bounce to the upside in what could be the start of an impulsive additive count 3, though we need a few confirmations for us to say that we have a low in place in the formation of this wave 2, and the wave 3 bounce is just getting started. So this could still be a wave 2 that is still unfolding in an ABC corrective structure, having this as a wave A. The bounce that is playing out at the moment could be the wave B, and on the charts I was able to sketch out the minimum target areas for that wave B by connecting the fibs from the high of the wave A above the $0.08 to the low that we made down here below the 0.05, giving me an area between the fib level 0.5 and the 7.8 that we need to pay attention to. Because if by any chance we get a bounce into this area and maybe at some point we get rejected, then that will be suggesting that we are going to see a sell-off to the lower side, giving us one more new low in this wave C, and also fully maximizing my red target area over here, giving us one more new low in the formation of this wave 2 before we can finally bounce to the upside in an additive count 3. But if by any chance we continue seeing higher prices, then we see that bullish momentum kick in, and we also managed to break above the high we made in the formation of that larger additive count 1 above the $0.08, then that will be suggesting a more bullish case scenario in the formation of this wave 3, whose minimum target areas can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of the wave 1, then dragging the fibs to the low of the second wave, and that gives me a minimum target area for the third wave at the fib level 1.618, and that is above the 0.14847. So that is a target area that we need to pay attention to. But remember that this area over here between the 0.06534 and the 0.037, that is the 0.06534 and the 0.07372. We need to see a break above that key area for us to see a bounce in this wave 3. But if by any chance we get rejected, then expect a sell-off in that Elliot wave, that is that Elliot wave count 2. So that is all I'm expecting here on the Vechain chart, and this is the area to pay attention to for the next coming hours. If I get to the Fetch AI chart, on the Fetch AI chart, we had seen a bit of a pullback in the formation of these Elliot wave count 4 into the minimum target areas for that Elliot wave count 4 between the 1.778 and the 1.65, an area that we fully maximized and also gave us a reaction to the upside. And there are high chances that we now have a low in place in the formation of these wave 4, and in the next coming hours we can easily bounce in the formation of these Elliot wave count 5. And for that to play out, we also need to see a break above key areas of resistances, like the area above the 1.95. The moment we manage to break above that area, then expect that aggressive push to the upside. And the minimum target areas for the wave 3, for the wave 5 can be given using the trend-based Fibonacci. So we can use the trend-based Fibonacci, connecting it from the low of the first wave to the high of the wave 1, then dragging the fibs to the high of the wave 3, and that gives me a minimum target area for that Elliot wave count 5 at the fib level 0.618 as the first target area, and that lies above the 2.849. So that is a target area that we need to pay attention to for the next coming hours. Yeah, so that is the price action that I'm expecting on these two charts. And remember that if by any chance we see another sell-off on the Fetch AI chart, giving us a break to the lower side of the 1.65, which is a very significant key area of support, then that will be suggesting that in the next coming hours we might see a more bearish case scenario where we can easily see a sell-off to our next key areas of support above the 1.48. This is the first target area to pay attention to in case we lose the 1.65. And if by any chance we lose the 1.48, then a more bearish case scenario will unfold where we can easily get a massive breakdown move to the 1.162 where we have our next key areas of support. Yes, so that is the roadmap that I'm expecting Fetch AI to follow for the next coming days. We can also take a look at Phantom. So Phantom has given us a bit of a bounce after a breakdown move in the formation of these wave 4, and the minimum target areas for that wave 4 were highlighted on the chart using this red target area that lies between the 1.1063 and the 0.9626, an area that we almost fully maximized and gave us a bit of a reaction to the upside. And today I was able to identify a resistance area because this could be an ABC corrective structure that is unfolding on this chart, and using the Fibonacci's, connecting the fibs from the lows down, that is up here above the 1.4 to the lows down here, I got my minimum target area for that wave B between the fib level 0.5 and the fib level 0.78, and that is between the 1.3 and the 1.1966, the area that I have marked here on the chart. So this is an area that we need to pay attention to, because if by any chance we get rejected within this area, then expect a sell-off in the formation of this wave C back into this red target area between the $1 mark and the 0.9626. But if by any chance we break to the upper side of the target area and also manage to break above the significant high we made above the $1.4, then expect a massive bullish movement to the upside in a negative count 5 that should easily get us back above the $2 mark, or maybe the $1.7. Yeah, so that is what I'm expecting on the phantom chart. We can also take a look at Polygon to see whether we have managed to break above key areas of resistances on the Polygon chart. The same thing is unfolding here on the Polygon chart, where I said to you that we had started a breakdown move in the formation of this wave 2, and the target areas I have marked on the charts between the 0.5846 and the 0.4692, an area that we saw a pullback into, though we didn't quite fully maximize the target area. And I said, for those that might have watched my video on Phantom, I said that there are chances that this could still be an ABC corrective structure that is unfolding. And if that is the case, then using the Fibonacci's, we should be able to identify areas that can give us resistance. So using the Fibonacci's, connecting the fibs from the highs we made above the $0.77 to the low over here below the 0.5, I got a minimum target area between the fib level 0.5 and the 7.8, and that is between the 0.7145 and the 0.6399. So this is an area that we need to pay attention to, because there are chances that we can easily get rejected within this target area. And if that plays out, I will be expecting a sell-off in this wave C, because that would be suggesting that this wave 2 is still unfolding in an ABC corrective structure, and this bounce over here is a bounce in a wave B. So we can expect one more new low in a wave C in case we get rejected over here. But if by any chance we manage to break to the upper side of this yellow target area, and also manage to break above the 1.6 the $0.77, the significant high we made over here, then that will be unlocking a more bullish case scenario where we can easily see an aggressive bounce, possibly taking us back above the $0.85 in the next coming days, and maybe above the dollar mark in the formation.